Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. We're talking about AMD as we continue to look into any risks to the AI trade. And is there any real validity to this AI bubble talk? And is the semiconductor complex at risk of losing its leadership in the AI trade? So NVIDIA may be the headline leader, but AMD helps answer a more useful question. And that's, is the theme being carried broadly by institutions, or is it getting forced through a single name? Before we get started, a quick disclaimer: this video, as well as all trade therapy content, is for educational purposes only. It's not investment advice. Trading involves risk, including the risk of loss. Always do your own due diligence and trade according to your own plan and your own risk tolerance. The lesson from Clarity this week applies to AMD in a very practical way. When liquidity conditions start to turn more supportive as the Fed continues to inject liquidity into the markets, institutions, they don't change their mind because of the story. They redeploy risk into higher signal areas, and they do it through structure. AMD is a great case study because the chart shows a very specific institutional tool in action, and that is the gap. On this weekly view, AMD delivered a gap that effectively reset the entire negotiation with this all-time resistance or all-time supply line. That matters because gaps are not just a price event, they're a positioning event. A gap over a trouble zone like this forces a step change in acceptance, and it forces anyone leaning the wrong way to act immediately. The shorts have to manage risk. Underwater managers have to decide whether they can still wait, and longs suddenly have a clean reference area to defend. Here's the key point. The test is not, does the gap fill? The real test is where acceptance forms relative to the gap. In a healthy condition, a pullback probes into the upper half of this gap. They firm up quickly, and that really shows the market doing two jobs at once. It cools the move enough to discourage chasing, but while still holding the line that keeps the campaign intact. If we jump over to a current time frame, this was our look back to October. If we look back to last week, we used a 2-week to try to just bring a little more data into our frame set here. On the current view, you can see why AMD stays in our top-down list whenever we look at NVIDIA. This doesn't read like a speculative sidecar. It reads like repaired leadership that institutions are still willing to carry. The big idea here is simple. The earlier base and the reaccumulation phase did the heavy lifting, and now the chart is operating from a higher acceptance level. That changes the risk math. The institutions prefer campaigns with clear reference points because they can scale in and manage exposure without improvising. When AMD stays above this reclaimed area and continues to act like it belongs there, it supports the idea that semiconductors are being managed as an opportunity set, not treated as a funding source. If you want one clean behavioral tell on this time frame, it's this: do pullbacks stay controlled, and do they resolve quickly? When the answer is yes, it signals risk regulation and not unwind. A better view is on the daily. The gap really is still the centerpiece of the story. You could actually see the campaign management process. After a gap forces acceptance higher, institutions can keep the advance intact by controlling where the checks stop and how quickly they get repaired. This is why the word acceptance matters so much. If price can continue holding the gap zone, that tells you institutions are defending the new regime. They're defending this level. But if price starts living below the gap, or if the rebounds start being rejected and it starts drifting down into this lower half of the gap or slightly below that, that tells us that the institutions in the market need a little more time. They're not prepared to defend this area. It needs a little more work before it can begin trending again. This is also where the gap over as a controlled tactic concept earns its place. In crowded markets, a gap can be a deliberate tool. It lifts acceptance to higher ground. It forces repositioning, and it leaves a clean reference point area for institutions to manage risk against. Again, the follow-through test is not whether the gap fills, it's whether price holds the upper portion of this gap and whether dips firm quickly, and whether the next push recruits participation without needing constant rescue. So what does AMD mean in the context of the potential AI bubble and potential risks to the AI trade and whether or not semiconductors are still in a leadership role? AMD's functioning as repaired leadership reduces concentration risk. It tells us that the complex is not pinned to one ticker. If AMD is able to hold this gap acceptance zone while the sector backdrop remains constructive, it increases the probability that weakness across the AI trade and semiconductor complex is being used to improve positioning and not abandon exposure. The risk is also clear and it's behavioral. If AMD starts giving back this acceptance zone, if it is unable to reclaim shorter term moving averages, that message is that institutions are regulating risk more aggressively. And in that environment, leaders can still work, but they tend to get choppier. And position management matters more than prediction. That's all the time we've got for AMD this week. We'll see you back here on the Trading Couch next week.